How do you know that we're not at the lows?
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening.
Markets are on edge, with stocks sinking and Bitcoin sliding, as an increasing number of experts warn that a recession might be on the horizon. The latest Federal Reserve survey shows recession expectations at their highest in 6 months, just as the Fed prepares for its next policy move. However, Cathie Wood, founder and CEO of ARK Invest, sees things differently. She believes an economic shift is unfolding that could force the Fed to act and reshape the investment landscape. The Nasdaq, S&P 500, and Bitcoin all took hits as investors reacted to growing recession fears. The Atlanta Fed now projects a 2.8% GDP contraction for Q1 2025, raising new concerns about economic stability. Inflation expectations are rising, putting the Fed in a tough position. Tightening too much could break the economy, while easing could lead to another inflationary spiral. Meanwhile, crypto markets, which often serve as a hedge against monetary instability, are feeling the pressure as Bitcoin struggles to hold key levels and liquidity remains tight. However, Cathie Wood argues that this could be the moment for a significant shift. She suggests we've already been in a rolling recession, with different sectors experiencing downturns at different times. Wood believes negative GDP growth might push the Fed to pivot sooner than expected, possibly with rate cuts, an end to quantitative tightening, or even fiscal stimulus like tax cut. If that happens, Bitcoin and risk assets could enter a new phase of growth as investors return to inflation hedges and high beta assets. Wood made these predictions in a recent interview with Bloomberg, where she also reiterated her $1.5 million Bitcoin price target.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Is that still your view? 1.5 million by 2030.
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk-on, risk-off. So I think that's what we're seeing. If we look at our on-chain analytics, what we see is, I'm sorry, I have to get this off. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
Do you see more of a sell-off before things get better in these risk assets, Bitcoin or otherwise? How do you know that we're not at the lows?
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down, and we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening. Well, we tend not to be very short term in our focus, but if we're right, and inflation is going to surprise on the low side of expectations. We wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation. Good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
CATHIE would views Bitcoin as a key indicator of risk appetite, and right now, the market is clearly in a risk-off phase. Despite the current sell-off, she remains bullish, pointing to Bitcoin's historical 4-year cycle, which she believes is still intact. This suggests that while short-term volatility may persist, the long-term trajectory for Bitcoin remains upward. However, the macroeconomic backdrop is still uncertain. CATHIE argues that the U.S. economy is navigating a rolling recession, with consumer spending slowing and businesses tightening their budget. She expects negative GDP growth in the near future, which could push the Federal Reserve to reconsider its stance. The Fed's next moves will be crucial, and CATHIE believes inflation is cooling more than many realize. If this trend continues, rate cuts could come sooner and be more aggressive than expected. When the Fed pivots, risk assets like Bitcoin could be among the first to benefit. During the interview, CATHIE also shared her views on meme coins, describing them as collector's items. She cautioned that only a few of the thousands of meme coins available will have any lasting impact, unlike top cryptocurrencies like Bitcoin, Ethereum, and Solana.
I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds. Because, and I think that, the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem. Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins. When we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying, and we think they're going to become very important in the years ahead. Meme coins, not so.
What about Trump's meme coin? Is that one of the ones that you think will become worthless, CATHIE?
It's interesting. The meme coins will be collector's items, so digital collector's items. And so, of course, some will withstand will withstand the judgment of time. And that may be one of them. But our working assumption is that when you're talking about millions of meme coins, that that's just a step too far, and that most of them are not going to be worth very much. Well, I think what is happening with the stablecoin movement, which, again, we're going to see deregulation and legislation this year, we think, which will open the doors to stablecoins. So USDC, that's Circles, USDT, that's Tethers. That's the on-ramp into DeFi, decentralized financial services. So you're already seeing lending and saving and yield harvesting taking place on these ecosystems, which are supported by Ethereum and Solana. And of course, you're seeing wrapped Bitcoin on Ethereum as well. So Bitcoin's trying to get into the game. But in terms of real utility, if you go to emerging markets, and I know this is not this market, but you go to emerging markets where their currencies destroy purchasing power and wealth with massive devaluation. So it's really their policy leaders. They are using Bitcoin in particular, but also stable coins, which is effectively the dollar, as backstops to their purchasing power and wealth, because they've been through too many of these devaluations. So I think the real utility, if you're looking at stable coins and Bitcoin today, is in the emerging markets, really protecting consumers' purchasing power and wealth.
In other news, CryptoQuant CEO Ki-Young Ju believes the Bitcoin bull cycle is over, and the crypto market is heading into a 6 to 12-month period of bearish or sideways price action. He posted that every on-chain metric signals a bear market, with fresh liquidity drying up and new whales selling Bitcoin at lower prices. CryptoQuant users who subscribed to his alerts received this signal a few days ago, and he assumes they've already adjusted their positions. The alert applies PCA to on-chain indicators to compute a 365-day moving average, identifying inflection points where the trend of the one-year moving average changes. In a follow-up post, Ki-Young Ju explained that he had been calling for a bull market over the past 2 years, even when indicators were borderline bearish. However, he now believes it's clear that the market is entering a bear phase. Realized cap-based indicators show a lack of new liquidity, and a massive volume of around 100,000 failed to push the price higher. Additionally, ETF inflows have been negative for 3 consecutive weeks. He emphasized that he couldn't keep sharing hopeful views when the data signals bearish trends, but he's not shorting BTC and still holds his spot. Ki-Young Ju's analysis contrasts with Cathie Wood's optimistic outlook, which anticipates relief when the Fed eventually ends quantitative tightening. Which scenario do you think is more likely, a 6 to 12-month pause or a continuation of the bull market driven by a change in Fed policies? Share your thoughts, comments, and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.